Okay, Russell, I have 9:35. Let's go ahead and get started here. First of all, to our guests who are joining us on the regular morning fuel, thank you for joining us. We know that you're still trying to stay in touch, and now as activity ramps up, you may have a chance to dial in. You may have a chance to see it on YouTube a little bit later, but we want to share a little bit of critical information for you today. Our guest today is Russell Evans. But as we get started, I want to remind everyone that their cameras have been turned off and their mics have been muted remotely. If you'd like to ask a question during the session, please use the chat function and we'll look at these questions and see if we can work them in. So as you guys know, the Petroleum Alliance of Oklahoma has lots of great partner relationships. These partner relationships are designed to save your business money and improve your bottom line or help you with continuing education. We'll talk about that a little bit later in the program, but I want to introduce our guest today and then start off with a little bit of news, if I can. Today, we're joined by Dr. Russell Evans from Oklahoma City University. Dr. Evans specializes in regional and fiscal economic forecasting and has become one of the leading experts on the economic condition and economic policy in Oklahoma. He's the executive director of the Stephen Agee Economic Research and Policy Institute, director of the Center for Regional Economic Forecasting and Policy Analysis, and in July, congratulations, was named the interim dean of the Minders School of Business at Oklahoma City University. So, Dr. Evans, we know we're going to talk about a special opportunity for our members in just a few minutes, but let's start with a few things at the top. You're going to be joining us down at the annual meeting, August 5th through 7th, at the Four Seasons Resort and Club Dallas at Las Colinas. We have a few rooms and sponsorship opportunities available. I want to read through our speakers lineup. EPA's Region 6 Senior Energy Policy Advisor will talk to us about the Biden administration's approach on oil and gas sector regulation for Arkansas, Louisiana, New Mexico, Oklahoma, and Texas. Robert Kaplan, President and CEO of the Dallas Federal Reserve Bank, will talk to us about monetary policy, the economy, and how he sees the world. Oklahoma Corporation Commissioner Dana Murphy will talk to us about her priorities as chairwoman for the remainder of 2021 and 22. We'll get an update from DC from U.S. Congresswoman Stephanie Bice, the American Fuel and Petrochemical Manufacturers, and others. And the largest operators are going to tell us how they see investment in Oklahoma today. And then you're going to be joining Mark Sneed of Region Track to give us a little bit of a long-range outlook on Oklahoma's oil and gas economics. So, folks, you can register online at thepetroleumalliance.com, and Natalie Kinmuth and the membership and events team can help you with sponsorships. Russell, thanks for joining us today. We really look forward to having you in Dallas. This morning, I heard Larry Fink of BlackRock say two things of note. He said that inflation was not transitory and that he saw oil going to $120 or $100 a barrel. Any comments or thoughts on that?
Yeah. So yeah, if this is a lunch meeting, that would be great because it would take a few hours to unpack both of those things. We could go. So let me start on the oil price outlook. So not the first time we've heard this and this idea that oil prices could be moving back towards $100. And so if you think about the short run, you've got some upside, some upward pressure right now on oil prices, namely global economic growth kind of moved into a pretty aggressive recovery mode. So you have pretty strong underlying economic demand. You have, particularly in air travel, we've talked previously about how important that jet fuel segment is for demand for petrol products, for petroleum products. And so you have leisure travel that's rebounding pretty strongly, and you have airlines anticipating a rebound in business travel as we move into the fall. And so you have, and then on top of that, you have the OPEC plus conversations that are kind of breaking down right now. That provides a little bit of a floor and a little bit of volatility. A little bit of upward pressure on prices, and so you have some things out there that are creating some upward pressure on prices. One of the things that has been interesting to us is we expected to see, at least I expected to see, even at this point in the cycle, that as prices recover to this point, in general, production is pretty responsive to price changes. And so what we haven't seen what we appear to have seen is that there's been a kind of a disciplined response to this price improving reality. We haven't seen, U.S. production, which was approaching 13 million barrels a day pre-pandemic, about 11.5 million barrels per day now. It hasn't been as responsive to the price pressures as we would have thought. Now, that's not to say that there's a coordinated, disciplined, judicious response, that lid could come off at any moment if start looking at frac spreads and completing wells that were previously unproduced and new wells being drilled. But so you got that upward pressure. On the other hand, I think you've got some downward pressure. I think you also have to acknowledge that that we're not entirely finished with this pandemic. As you look at variants and hot pockets around the United States and even in Oklahoma, we're trying to figure out how separated is Tulsa from Springfield, Missouri, right? So how does that play out in Oklahoma? And so you certainly have some concerns there that that maybe we're not quite done with this pandemic reality. There are areas of the economic recovery around the globe that seem to be faltering just a little bit. And so I don't know, as we sit here today in the mid 70s, I think there's still a ways to go in order to get to 100, 105, or 110. There's certainly possible, but I think it's too early to make that to anchor that as your baseline expectation or your most likely outcome. I don't think it's too soon to acknowledge that it's at least a possibility.
Well, we do have the Delta variant headwinds. We also have political pressures that create headwinds for our guys too. So that's very interesting insight. The rig count for Oklahoma is, according to Baker Hughes, 27.
Right.
I think 479 nationwide, which is 86% higher than it was a year ago.
Right.
And give or take, there are probably 13 or so frac spreads working in Oklahoma, about 234 nationwide.
Right.
So interesting time as we see this melt up.
That's right. I think that's exactly right. And it will be interesting to see whether or not, does it unleash or does it remain kind of a disciplined response to improving prices? I have to suspect that there's some disciplined response here. And big picture, Brooke, I think it's also important to remember that a few years ago when we had high oil and natural gas prices, as good as that appears on the surface for producers, that does begin to create pretty strong financial incentives to explore electric vehicles, installed renewables and electricity generation capacity, small scale solar and micro wind. And so you had all these very interesting conversations that really went away once oil prices, fossil fuel prices fell. Now all of a sudden that substitution begins to not make as much sense. And I remember we've talked about this previously with your audiences that then now you have administrations that require subsidies and policies to try to create that artificial incentive for the transition, because the natural incentive is not there anymore at these prices. And so it's really sort of an interesting dynamic. There really is for Oklahoma. I feel like there's kind of a sweet spot for prices where, high enough to support our production and our producers, but low enough that it doesn't really, that it doesn't kind of create this rush towards a substitution away from.
Right. So as I think about it, and we don't want to give away everything that we'll talk about, but at the annual meeting, but the administration seems bent on creating an artificial scarcity when it comes to oil and gas production in the United States of America, while simultaneously it's reaching out to OPEC Plus to tell them to turn on the spigots. So that sort of, I'm going to use the term hypocrisy, but at least an awareness of the economic, piece of this equation is pretty interesting to watch and observe. It's a little bit like a contortionist trying to fit himself or herself into a box or something.
It really is. And then the other piece of that, your comment was on the inflation side. So and the two are not entirely unrelated. On the inflation side, I was early on skeptical of the temporary and transitory line of the Federal Reserve. I didn't understand exactly what does that mean. Like, how long does inflation have to be persistent before it's no longer temporary? Like these are terms that are not well defined in monetary policy, and in general, we like well-defined terms. We want to know when does the Federal Reserve see something that is no longer temporary, and when is it no longer transitory? And neither one, they haven't gone on record to say what kind of what that means. I have kind of come back the other direction. So I flip-flopped just a little bit on this. And when you look at the headline of inflation numbers like from yesterday, you look at the CPI numbers, very strong numbers, but you're comparing against very weak numbers a year ago. So you got to consider what you're comparing against. And it's really, the headline numbers are really being driven by things like airfares, which are sharply higher than they were a year ago. Things like used car sales, which are sharply higher than they were a year ago. And so the way we measure inflation is we track a basket of goods and services, and there are a few things in that basket right now that are really distorting the overall perspective. And so consumers, by and large, we're very fearful of inflation, right? We tend to think inflation is real, it's here, we see it around us. What's interesting is that bond markets seem to be buying the Federal Reserve's stance for now. And so there was a moment in time not that long ago, if you think about bonds and the interest payments that are paid off of those bonds, well, in a high inflationary environment, that stream of payments becomes less valuable to you because they're worth less in a high inflation environment. And so you can kind of look at the bond market. You can kind of see, how does the bond market think? What does the bond market think about inflation expectations based on bond prices and yields of these different duration bonds? And early on, there was some bond sell-off that suggested the bond market was calling the Fed's bluff. But recently, the bond market seems to be signaling that they'll give the Federal Reserve a little bit of time here to figure this out. So the challenge for the Federal Reserve, of course, will be if you get $120 oil, right? Then even if the prices of some raw materials are falling, the price of production inside industrial processes is still going up because the price of oil has gone up. And so the Federal Reserve would actually have a harder time navigating policy at $120 oil than they would at $80 oil, just because they're going to be trying to soak up one inflationary pressure as another inflationary pressure emerges in the system.
Right. Amazing time.
Yeah.
And we don't have really a precedent for this to look back to see exactly how this is going to come.
That's right. That's right. As many downturns and swings as Oklahoma's been through, right? I know you and I visited early on in this, and I really don't think that, it's easy to sort of in Oklahoma say, well, we've been here before. Well, we've been through things before, but I don't know that we've actually been here before. This one feels to me, and this one feels to me a little different than previous transitions.
Well, let's talk a little bit about the Oklahoma Energy Index.
Yeah.
I think you have a new one out that we just are publishing. So talk to us a little bit about what you're seeing there. Where are we in our road to recovery?
Yeah, firmly in recovery mode, right? Which is the good news. And so, we've talked about slowly tracing out the bottom many months in those energy indexes. We just kept saying, look, it looks like we're holding the bottom. We've made a bottom. We're holding the bottom. We're 2 or 3 months in, but firmly into recovery mode. You talked about rig counts in Oklahoma, Brooke. It reminds me of a story years ago. I was fishing with my dad. I was on a small creek in Colorado, fly fishing, and caught about a 6-inch brook trout and threw him back and fished a couple more, and I had another one on. My dad turned around to look and pulled him out, and he was about an 8-inch brown trout. And my dad said, another small one. And I said, no, it's not another small one. I said, this one's 30% larger than the one I just caught. It's all about perspective, right? And so that's kind of where we're at in Oklahoma. And so you have this, rig activity at 27, 28 rigs is a little bit like catching a less small fish, right? And so you have this percentage increase. We're definitely recovering. We're moving the right direction, but we're still at 28, 29, 30 rigs, whereas a couple of years ago, we would have drawn a line in the sand and said anything less than 40 or 50 is just it's just an all-out, but it would just almost be unheard of to have less than 40 or 50. So at 28, we're moving in the right direction, but we're still moving. Like we're still emerging from from a pretty low level of total activity. But firmly in recovery is the good news.
We're adding back jobs. My review of the labor statistics data shows that we hit the bottom in December in oil and gas full-time employees and extraction. We've talked about that proxy number for employment with regard to mining and logging. And it looks like we've added about 1,800 jobs since December, which is great. And we are very thankful for that, but we have a long way to go. Challenge for us is I see, we're 60% smaller in terms of employment than we were at the peak, right, in November of 2014.
That's right.
So,
yeah, but what's interesting, if you go back to 2014, what has increased and held steady is the size of the oil and gas, sort of the size of the sector relative to the total economy.
yes.
So Oklahoma's oil and gas sector is still 20% of total economic activity in and of itself, but it's just doing it with far fewer workers. And so we'll add back some of those workers, but just 10 years ago, each worker would have represented about $220,000 in gross state product. And today, every one worker in your industry represents about $420,000 in gross state product.
That's amazing.
And so it's not, it's the, the contribution to the economy really hasn't changed all that much. What's changed is the efficiencies and doing it with fewer workers than less labor intensive than it was just 10, 12 years ago.
That's fascinating. $420,000 contribution to gross state product for every oil and gas employee in the state.
That's right. Yep.
That's fantastic. Fantastic. Well, let's talk a little bit about one more thing, and then I want to transition to the news that we want to really cover here. And that's about, last question is the influx of federal dollars flowing to Oklahoma. You and I have talked a little bit about how that might be covering up some of the destruction within the economy. Do you have any new perspectives on that?
Only that, as the data comes out, with a lag, as you get the data releases, it's crystal clear that, that we have some artificial economic strength. We have some real economic strength, which is the good news, but it's definitely being supported by some artificial flows of dollars. And now we're watching closely the child tax credits, right? And so you have essentially kind of an underreported, unsung flow of stimulus dollars that's just about to start hitting accounts here in the next few weeks. And so we'll be interested to see how that, how that factors in. At some point, we are going to have to pull back, some of this artificial economic support and allow the private sector to see, kind of where it really is, right? And so we always use health metaphors, but at some point, you're going to have to pull back some of the support that you're taking. You're going to have to see what your true strength is, and then to begin to develop some strength. But I don't know how quickly that happens. By the time you chase the stimulus dollars with the child tax credits dollars, and you chase that with an infrastructure bill, and you chase that with, right, the proposed $3.5 trillion spending bill that's been banded around the news in the last couple of days. I don't know. I don't know how long this plays out before it just can't play out any longer. But it's definitely been incredibly unusual and given people a false sense of our true underlying economic strength. I think there's a very good foundation there, but it's not as strong as some of the tax collection numbers might lead you to believe.
Well, listen, we appreciate that insight. We look forward to unpacking this a little bit more at our annual meeting coming up August 5th through the 7th at the Four Seasons Las Colinas. But one of the wonderful things that we have seen during this time period is that many of the folks have taken an opportunity during the downturn to continue with their education, to gather new skill sets. And one of the things that we want to talk to you about today is this wonderful new partnership program that we have with Oklahoma City University. Can you unpack that a little bit for us? Because this is special to Petroleum Alliance members. So for our viewers out there, we are always looking for opportunities to help you save cost, to improve your bottom line, and to also continue your education, because that is so important in our field. Innovation is driving our industry forward rapidly. So with that, Russell, would you please talk to us a little bit about this great partnership we have?
Yeah, and I'm really excited about this partnership, Rick. And I think for me this is almost personal, right? This goes back to I was born son of a geologist, engineer and geologist in West Texas oil fields, Midland, Texas, in the mid '70s. Relocated to Tulsa, when it was the oil capital of the world, a few years later, and then experienced my own family what it was like when the industry went through, the downturn in the mid '80s. And I can remember very much being in upper elementary school and middle school and kind of seeing how that impacted my family, and how hard my father worked to stay in the industry, how passionate he was about the industry, how hard he worked to stay attached to the industry so that he could come back and finish his career there. And certainly our family was rewarded for his efforts. And so as I think about both fluctuations and long run transitions, and we think about what helps people stay successful in the energy industry, it occurs to me that it's really about having a broad set of skills and an excellent network of peers. And when I think about the relationship that you and I are kind of unveiling today, I really think about us bringing those are the things that we bring to the table, kind of an unmatched network of peers that you have in the Petroleum Alliance to bring people together, to share ideas, to network, and the ability that we have in the Minor School of Business to help people develop a broad set of skills. And so what we've launched here is a partnership with the Petroleum Alliance, where every member of the Petroleum Alliance is treated as a corporate partner in our graduate education programs at the Minor School of Business. And as a corporate partner, you effectively get about a 40% discount on your graduate degree programs. We waive all the university fees associated with those degree programs, and those degree programs then come at a cost to you at just tuition, which is only $590 a credit hour. And so we're able to waive all the university fees for our programs, which includes energy management, master's degree in energy management, includes energy legal studies, includes our MBA programs. So if you're an individual, right now, and as a member of the Petroleum Alliance, then you can come enroll and pursue your education and take these classes, take these programs, and develop that broad set of skills that really sets you apart and prepares you for success in your industry through fluctuations and through transitions. And if you're an employer, if you're an employer member of the Petroleum Alliance, then this essentially becomes part of your compensation package you get to extend to all of your employees. You're now in a position to go to all of your employees across your entire organization and say, hey, because we are members of the Petroleum Alliance, we can offer you this important piece of our of compensation. You can go to the Minor School of Business. You can participate in these graduate degree programs and have all of your university fees waived because we're a member of the Petroleum Alliance. And so I'd be happy to talk about those three programs. I could talk about these three programs all day, but I'm really excited about this partnership because I really do feel like this is a fantastic opportunity for us to bring complementary pieces to the table, a network of peers, those peer relationships, and developing a broad set of business skills.
Well, Dr. Evans, that was really well said. And I understand also that folks who are signing up in August 2021 also can qualify for a scholarship. Is that right? $2,500 scholarship?
That's right. So we have scholarship opportunities. And so we have lots of opportunities to help match students with their best program. So yeah, absolutely. Come see us and we will find you the scholarships that you need and help you get started in these programs.
Well, that's fantastic news. Why don't you talk a little bit about the programs themselves, energy management, energy legal studies, et cetera?
Yeah. So our energy management, energy legal studies, we really developed hand in hand with the industry, right? So about 10 years ago, we met with industry executives and we said, hey, really, what are your needs? Where are the gaps? And we've talked about this over the years, working with the Petroleum Alliance and other industry trade groups. That really what's happening in Oklahoma's oil and gas industry is there's more diversity than you would think. And so once you go inside the doors of the oil and gas industry, there are more jobs in data analytics, business analytics, supply chain management, accounting, right? There are more like non-engineering and geology jobs than used to be the case a generation ago. A generation ago, you walked inside the doors of an oil and gas company and it was geologists and engineers and a handful of support staff. And so there's more diversity in the sector than I think people realize when they just walk in front of the buildings. And so our energy management degree program is really built around helping people identify and build those skills, those business skills towards an application in the energy industry. And here energy broadly, right? Not just the oil and gas industry, but obviously being in Oklahoma, a lot of oil and gas emphasis, but energy industry broadly, helping people understand how do I take basic accounting principles and leverage them to better understand what's going on inside my own company. What we hear from a lot of students in our energy management classes, frankly, is they'll take their energy accounting class and there'll be a class or two in, and then they'll be in a staff meeting, there'll be in something inside their own company, and they'll come back to class and say, you know what, it makes more sense to me now. Like I understood, as we went over balance statements and financial metrics and key objectives, I understand now what it is that we're trying to do. Like it clicked with me that I understand how these two things are related. We get the same thing. We talk about in energy economics, we talk about energy policy, energy operations management, legal environment. So much is changing on the legal side. And so just staying ahead in those programs of what's happening in terms of cities that are prohibiting, in new construction, natural gas hookups, right? It's just really, evolving space. And so in our energy management program, what you're going to get is a business education that's really kind of tailored towards some energy applications. Our energy legal studies program is really built around how do we help particularly land management professionals. How do we help in that segment of the industry for individuals that really need a fair amount of legal and contract understanding, but maybe don't need a full law degree? So how do we help? How do we get it? How do we avoid a 3-year law degree and get something that can be a 12 or 18-month program and get somebody through 10 classes, really help them in that field. And so that's our legal studies program. And then our MBA program is really, an MBA program is really designed to help individuals who maybe have some business education but want to sharpen that skill set a little bit. And an MBA program is designed to take people who don't have a business degree and quickly get them up to speed on conversant in the language of business. And so we'll see in our MBA programs a lot of engineers, a lot of people that come from different fields, and now they're in their job and they need that business education. And so our MBA programs are heavily focused on how do we help you see the application of business principles to your industry, and heavily focused on leadership. I think we're the only MBA program in the region that integrates into our core curriculum an assessment of your leadership strengths, weaknesses, your characters, your risks. And so every student in our MBA program will take an independent assessment of their leadership style, their leadership strengths and weaknesses. They get individualized feedback from a trained leadership coach and one of our faculty members. And so our MBA focus really has that leadership focus. But all of them serve the same broad purpose, which is how do we help individuals develop a broader set of skills that then helps them excel in transitions and in fluctuations inside their industry.
Well, first of all, Oklahoma City University is really close for those who live and work in the Oklahoma City metro area. But you also are offering a lot of these programs online as well. Is that correct?
That's correct. Yeah, our energy management, interlegal studies are now entirely online. Our MBA program has the option to be entirely online, and we also have in-person programs for our MBA. And what's important is even though you're online, we still run you through as a cohort. And so one of the things that our students say is, boy, going through the program with 10 or 12 or 15 other people, even though we were online, we talked to each other online all the time. We coordinated via Zoom. We worked on activities and projects together. And so you come out of the program really with an intimate set of peers that often stay with our students after they leave the program. And it also spurs a fair amount of entrepreneurship. It's been pretty amazing to see how many energy industry ideas have come through our energy management programs. As students have sat in classes, as they've done case studies together, as they've talked with one another, it's been amazing to see how many new companies have been formed out of conversations that started in some of those cohorts. It's pretty fantastic.
Well, that's fantastic. We talked about the networking. We talked about the knowledge, the fact that this is now an opportunity for the corporate members of the Petroleum Alliance of Oklahoma to offer this to their employees is just lights out. It's fantastic, and we love this partnership. What else should we talk about with regard to how to get started here? How do folks reach out to you? We'll be to our companies, but if they want to take the initiative and reach out now, how do they do it?
Yeah, so we would obviously we'd love to hear from folks. We are still in the process, and if you're participating in the conversation today and you're considering graduate education and you wonder if you're too late, the answer is you are not. So it's not uncommon at all in our graduate programs. The big enrollment admissions time is really late summer. And so it really is a lot of people who are looking at, here's what my 12 months, my 18 months ahead looks like. And I think now's a good time for me to get started. So if you're interested in getting started, you are not too late. We are still forming cohorts for this August. And you can reach out to me directly at rrevans@okcu.edu. I'd be happy to point you in the right direction. Or go to our webpage. Go to our Minders School of Business webpage. You can go to okcu.edu and navigate to the Minders webpage, and we will push you in the right direction. But yeah, reach out to us personally. We would love to get you going and get you started. it is absolutely not too late. We are in a rush right now of getting people enrolled for our fall start.
Right. And we're going to also be promoting all this and providing the appropriate links and background information on our weekly highlights, in our webpage, etc. So stay tuned, guys, for a little bit more information on that. This is a really exciting thing. Russell, is there anything else you'd like to touch on with this program?
I just really can't emphasize enough that, as somebody who has lived through the oil and gas fluctuations as a child, as a practicing economist, I feel like my life's been defined in some ways by the evolution of the oil and gas industry, right? It really did impact my childhood. And I don't know how I ended up here as a professional, but, I ended up as an economist, and then I ended up, staying in Oklahoma and then living through a shale revolution, a great recession, right? An incredible recovery, a downturn in the mid-teens, then a COVID pandemic, and so in a lot of ways, my personal and professional life has become defined by through the growth and evolution transitions in the energy industry. And I just can't emphasize enough my conviction that regardless of what your role is in your industry, a broad set of business skills is going to allow you to be more successful, more indispensable inside your own organization. And I think if you really buy into this idea of how do I sharpen my skills and develop skills, and how do I fully embrace, what membership allows me, the Petroleum Alliance, how do I really fully engage this network of peers? I think that's the recipe for success. Because I don't think, Brooke, between you and I'm not sure that we can expect an uninterrupted 20 year. I think if anybody's in the industry today and you expect an uninterrupted, right, free flowing career, absence of bumps or transitions or fluctuations, I think that's unlikely given history.
Right.
And so I think instead, I think the right play is to prepare yourself for that reality by engaging your peers and developing that broad set of business skills.
Well, that's fantastic, Dr. Evans. Thank you so much. I want to reemphasize university fees waived, the opportunity to qualify for a $2,500 scholarship for students who are Petroleum Alliance members and begin classes in August 2021.
That's correct.
Deferred billing, some great programs: Masters of Science in Energy Management, Master of Science in Energy Legal Studies, Leadership MBA, Master of Science in Accounting. So
that's right.
Dr. Evans, thank you very much for that information. That's great stuff. We look forward to seeing you down at the Four Seasons Las Colinas in just a few weeks, August 5th through the 7th. There's still room availability and some sponsorship opportunities. The team here can help folks with that. And as we transition out here, I want to make certain that I touch on a few other little housekeeping things. More information about our partnership with OCU will be found in the Partners Program section of our Alliance website. And we're going to be reaching out to make sure that HR managers know that this is a great opportunity to include this benefit in their compensation packages. Want to remind attendees registration is open for August annual meeting. I've mentioned that again. And information on our annual meeting and all of our events can be found at thepetroleumalliance.com, or look for our events email each Tuesday, or the Alliance highlights email every Friday. Dr. Evans, have we missed anything that you want to cover here as we exit?
No, I'm just excited to join your group down in Las Colinas here in a few weeks and really continue this conversation about what does the long run transition look like, right? In the short run, we talked about some upward and some offsetting pressures on oil prices. But I think if you're trying to form a 5-year, 10-year, 20-year outlook for the industry, I think that's a very interesting conversation. It's a mix of economic fundamentals and policy, and right, I think that's going to be a fascinating conversation. I look forward to being part of it.
Dr. Evans, thank you very much for joining us today. Appreciate all of our participants tuning into these morning fuels. We look forward to providing some additional critical business information as we roll forward. Thanks very much, guys. Appreciate it. Have a great day.